You know, this van makes a pretty nice little studio. It's going to be a great workspace once I get it completed. I am here because my parents and grandparents didn't have the same opportunities that I had to learn about money. And like it or not, money matters. So, the old-fashioned way, what we're going to do is talk about investing. We're going to talk about stock market, bond market, real estate market. We'll talk about Bitcoin, but not much. We'll talk about anything that has to do with investing, which includes options, which I love. The risks, we'll talk about the rewards. And mostly we'll talk about investing in a way that people who don't have experience can understand. You know, there's a lot of words you can throw out, a lot of lingo, but it's not necessary. Investing is not complicated. If you ever listen to a guy like Warren Buffett, it's not complicated. It's very simple. Now, investing is not gambling. That's two different things. I have a friend, she goes to the casinos. She may win $10,000. She may lose $10,000. But that's not what we're talking about. We're talking about looking at a company, evaluating it, making sure it meets our criteria, whatever that might be, and deciding, is that a company we want to buy? And that's really the point of it all. You're buying a company. You are an owner of a company. You may not have voting rights, but you are truly an owner of the company. And when the company profits, then eventually you will profit. Now, prices go up and down, all of that. There are ways to invest safely. There's ways to invest to manage your money. There's ways to invest to not lose any money. There's ways to invest to really make a lot of money. I've made, I think the best I've done was like $85,000 on a stock that was, I believe, like $5, $6 a share. In one transaction I'm talking about. Bought it over a period of time, and a certain event happened, nothing major, but it was enough for me, and then I sold it. So, there are a lot of strategies, and that's what we're going to talk about. So my goal is to have you, all of you, us, understand investing the way it's meant to be, not gambling, like I said, and to learn how to do it correctly, because there are ways to do it and there are ways not to do it. To learn how to evaluate a company in a simple way. You don't need hundreds of pages of charts and all this drama to understand if you like a company or if you don't. We are going to talk about, definitions like what's an asset. An asset is something that brings in money, basically, for our purposes. Liabilities. Liabilities are the things that take money away. So like a house is not necessarily an asset because you're usually paying money out for a house. My place, which is up for sale right now, it costs me a lot every month to live there. I mean, it's a great place. I love it, actually. I love the neighborhood, all of that stuff. But I guess my goals have changed. Since I turned 50, things change. So that's a liability. Now, if you own a rental property and there is positive income on that and there's money coming in more than going out, then you can call that an asset. And we're not talking about equity. Equity is something different. Assets, liabilities, stocks, bonds, mutual funds, EFTs. There's so many things that we can get involved in. And that's the beauty of it. You get to pick and choose what you want to do based on your risk tolerance. So we're going to talk about the foundations of investing because you need to start from the beginning sometimes, right? So what is a company? Somebody starts a business, they either sell something or provide a service, and it's theirs. They pay people to work for them maybe, and they keep whatever profits there might be. A business. A company that's public divides itself into a lot of pieces, right? Millions of pieces. Elon Musk, for example, when he started his company, he gave himself about 20 million of those pieces, right? If I were to buy it, I'd buy 5 pieces. So there's a big difference, and that's one of the reasons why he's the richest man in the world. He's a smart guy, but that's all I'll say about that. Pieces, though, is the point. You have the ability to buy pieces of a company. That means you will own the company. You will be an owner. You won't get to make decisions on it, but you do get to share in the profits. When the company makes money, they can pay you every month or every quarter or every year, whatever that might be, a portion of their profits because you are a shareholder. You hold a share of that company. You own part of the company. That's a big deal. If you buy a company today and keep it in 20 years and that company is successful, you will be successful because you will get to participate in the profits of that company. So, a stock, they call it, because you want to take stock of what you own. A stock is a share, a portion of a company that you now own a piece of. If you buy 1 share of a stock, you have the right to now say of the stock, say the company's based in Hawaii, right? I have a company that's based in Hawaii. Well, I'm a shareholder of a company that's based in Hawaii. Every time I fly to Hawaii, like once a year, to check on that company, guess what? I get to write off the cost of that flight, the cost of the hotel. So if I stay a week and attend the shareholder meeting, I get to write that off on my taxes. So if I make $50,000 and that trip cost me $4,000, now my income that I get taxed on is going to be $4,000 less, so $46,000. And if you do that enough, which is the beauty of owning a business, then that number that you're taxed on goes way down. And that also is a goal, but for another time. Now, they also have bonds. Bonds are a great thing. There's a guy, he's a vice president of Smith Barney, where I used to work, actually worked for him. His name is Bill Barney. I learned a lot from Bill Barney. And I learned a lot from his grandfather, who was also a broker, of course, right? He called them pop stocks. And he told me, he said, Donald, if you buy these stocks, you will always win. And he also said that his grandfather taught him never... Bill Barney taught me about bonds in a way that I didn't understand. And, you know, rich people have a different way of looking at things because they were taught things and they have different experiences and different responsibilities. So if you buy a bond, say you come into some money and you don't want to spend it, you don't want to lose it, but you know, you got stuff to take care of and you want it to work for you. You can buy a bond, and the money that you make off of that bond in interest every month or quarter or year or however they pay you, that money can be pegged towards, say, your property tax. So this bond is not to be touched. That money is to pay for your property tax. And then guess what? You don't have property taxes, basically. Or it can be pegged towards, you know, whatever you might want it to be. So bond is just a company or a municipality, a city, a state, a government who says, loan me $1, I'll pay you interest on the dollar for a number of years, whatever that is, and at the end of that time period, I'll give you the dollar back. So it's really a loan, and there's different qualities, depending on the stability of the company or the government or whatever. And the more stable it is, or the more guaranteed it might be, then the lower the bond will pay you. So the U.S. government bonds don't pay a lot because, as far as we know, the U.S. government won't default on its debts. They'll pay their bills, you'll get paid the interest, and then at the end of the term, you'll get the full value of your bond back. Now, you can sell a bond anytime. So the company, I'll just use a state. The state issues a bond, you buy it, you give them the money, they pay you interest. At the end of the term, they'll give you the full value back. But say you don't want to wait till the end of 5 years. So you can sell that bond just on the market. It's a market. We call it the stock market or the bond market or the options market, whatever it might be. It's like going to the store and there's all this stuff that you can buy. It's a market. So you can sell it. Somebody else on the other side will buy it. There's some people in the middle there, but in the end, there's someone else who's buying that bond from you. And that bond can go up in value. So if you sell it, you can make money, or it can also go down in value. But if it goes down, don't sell it, right? So there's a lot of ways to make money in the bond market, and it's safe, There's a guy I used to know. He'd come in. He was an Italian guy, I think, and he'd do like this, He'd come in, and then his assistant would say, "Oh, we sold 10 bonds today." He's like, all right, it's a good day. He just made, $8,000 that day. And it wasn't even there because people call in, their bonds mature, they want to buy another bond, and it goes, oh, I'll tell you a secret. If you buy a bond and it says that the bond pays 5% interest, guess what? It doesn't really. It's going to pay you 5% interest, but maybe it pays 10% interest. So it's really up to the broker there's a number set, but it's flexible. So the broker could say, you know what, this bond pays 6.5% instead of the 10%. He's going to get the difference. Or he can say bond pays 5%, and he gets the difference. So that bond market, there's big money in that. If you get good, stable people who just want to preserve their income. So now So if you go buy a bond, you can negotiate that. You can say, nah, I'm looking for this much, and they may or may not do it. Anyway, mutual funds. Everybody has mutual funds because that's kind of the basis of a 401k or other retirement. And it's easy because you have somebody else managing it for you. So they buy a bunch of stuff, maybe 20 different companies, stocks in 20 different companies, and then there's someone there who manages it for you. They'll charge a fee, so you better look at the fees because you may think you're getting a good deal and it's cheap, but you may be spending a lot in fees and other expenses. But mutual funds are great. If you don't want to buy, say, 5 stocks on your own, and you want to let somebody else take care of these things, you just buy a mutual fund. It's easy. No problem. And then you can also sell the mutual fund. So that price could go up or it could go down. It's a set number every day, but you could sell it for that amount. And you may make money or you may lose money. I'm saying that because that's the truth. There's a balance. But the goal is really to make money. And like Bill Barney's grandfather would say, never bet against the United States in the financial sense, because it's a powerhouse and we have abilities, and I believe it. There are other types of mutual funds, and we'll talk about that later, but there are some that are better than just the regular 401k kind of mutual funds, at least that I like better. It really just depends on your goals. What else can we talk about? I think that's enough for the day. So what you have to do, and this is the goal, is you have to open an account somewhere. Charles Schwab, They're one of the largest. Robinhood, E-Trade, any of those, it almost doesn't matter. Almost. There are several, and just pick one. Especially when you're just starting, it's not going to make a difference. Pick one, call, go online, open an account. That's your assignment. No excuses, no, oh, I don't know enough. You can study about this stuff for 50 years before you step forward and actually take action. Don't let fear stop you, because fear will keep you in a rut, and you may never get out of that rut. Open an account. Deposit $50. It does not take a lot of money to make money. Now, if you want to make a lot of money, it helps if you have a lot of money. But we're just starting. We're just trying to get you going, right? Open an account. Make a deposit. If you can, set it up so that deposit happens every week or every month. And then forget about the deposit part of it so it can accumulate. Because it's not going to get bigger if you don't add money to it. And then we'll talk about how to actually buy something, like the actual steps, how to sell something. There are ways how to negotiate with the people at the stock exchange, which is really just computers now. You know, in my day, there were literally people like you see on trading places. You know, it's like crazy, and they're throwing paper and they're yelling, "Ah, buy, sell." That doesn't happen anymore. It's all computerized. But there's a way to do it, and there's a way to save money while you're doing it. There's a way to negotiate with those computers so you don't spend as much money. And not spending money is kind of the same as making money. So we'll talk about some other things. That's enough time for today. This is my first real video for the old-fashioned way. And you know, I've been wanting to do this for a long time. Have done it in the past, online classes, and it was great, but for different reasons I stopped. I didn't think the construct was working, even though people had bought securities of different types. They had bought different stocks, and people actually made money and still own those stocks. But in an ongoing kind of way, I think beginners, sort of, or novice, not experts, need sort of hand-holding, you know, not just for it to end and then you're on your own, but for it to continue. So that's the goal. So, and that's part of the reason that I have this van. So what I'm going to do is work on my project, because this van is going to be a mobile office for me. And I'm excited about it. It's going to be a new experience, but it's going to be great. It's going to have everything except a washer and dryer. It's going to have a kitchen, oven, refrigerator, living room, couple of beds, shower, toilet, you know, the important things. And maybe I'll come see you one day. So, time for me to get started, because I'm about to cut some holes in the side of the van. And I will see you next time.